Hello, good morning. The first weekend inner circle of the new year. Been plenty of things going on. Excuse my voice today, I've got a bit of a cold. But we'll crack on through, and there's actually been a lot going on. Talked about just before Christmas, the main thrust was there any support in equities? And the answer was no. And we fell pretty dramatically into the holiday, and then we've reversed pretty sharply. I'm going to come to that a little bit later. I'm going to start off with currencies, as we also had something that is a perennial problem in an algorithmic world, and that is liquidity. Arguments always say that algorithms provide liquidity. Well, they do until something happens and the liquidity disappears, and then they all head for the hills at the same time. And we get exactly what's happened here on FX. This is the Aussie dollar spot on the what day was it? 3rd of January, and you can see this massive spike down. So a flash crash. Which leads me into the next question I'm often asked is, do we use stops? And the answer is purely for this reason, no. All our stops are based on a stop close basis, purely so that you don't get wiped out by these sort of things. What it means is we risk a great deal less, so quite often risk in a big account would be only at 0.1%, never go higher than 1, and so while there'll always be slippage on stop close orders from where the price has got a break, you avoid these sort of wipeouts. If you have guaranteed stops, which some platforms do, make sure you read the small print, because what can also happen is this flash crash happened when the futures was closed. So if your position was based on futures, there was a massive gap lower. So if I just do an intraday chart here, it will show up. Just have to spread this out a little bit. Yeah, so the opening was all the way down here. So whereas spot flash crashed, futures just opened where the spot was at that time, and then of course it's come all the way back. And this is what typically happens when you get a flash crash. This price goes straight back to where it started. It does muck up the charts, there's no doubt about it. Creates what can be argued as false highs or lows, but they still have to be referenced. So we'll start with currencies. We'll go back to the spot on Aussie, and a massive dip down, and then we've come back the other way, and we've actually had a power play buy signal, which is that green square, but we're still below the key level at 71.56 to 59, so still suffering to a certain extent. Let's do the Kiwi. Kiwi didn't crash quite as much, and we've also created a buy signal, and then we've had a timing signal after that, and effectively we've held that weekly level at 66.77, because we never closed below it, so that's a decent support. And so there's validity to actually get long that one. If we do the cross, we talked about Aussie Kiwi before, also flash crashed, and then it's come back, and now it's created a buy signal, so it's taking its time there, but quite interested in trying to get long that one. We'll quickly look at the intraday setup, and this is the Aussie spot, and broke up after payroll. Target is 72.77, and then we've got that monthly level ahead of it. We do the Kiwi. It's done a similar thing, managed to get to 3 up, normal limit of participation, and has retracted back down, but decent support down at 66.90. And if we do the cross, fairly crazy pivot at the bottom, but again you can see that we've broken out the top. Really good zone at 105.30 down to 105.10, so that's the area to try and get long on a dip back down. Move across to the other majors. So euro dollar still trapped in sideways, had a negative but not at resistance, not really a great deal going on there. Pound It's going to be buffeted as usual by Brexit. Having said that, we came down to a support, held it, a minor buy signal, but we're still in sideways. Yen's also been winging around. It was really the yen that caused the problem. It was a holiday in Japan, so you had real lack of liquidity. You see the spike down, and then we've had a buy signal at that monthly support yesterday. So 107.31 is the key level. I'll just quickly do the intraday setup. Still plenty of noise above there, yeah. So definitely the Aussie and the Kiwi look like better value. Going to do some of the crosses before we move on. So you have Aussie yen. You can see that we went below that big monthly level, closed way above it, and we've had a buy signal. We closed back above the weekly. If I do, let's do Euro yen as well, because that was pretty big. That had broken down the day before and gave us a slam dunk signal. I didn't get involved because it was a holiday in Japan, and I said, well, I don't really, there's no liquidity here, it could go either way. As it turned out, it collapsed lower. I didn't close back above the monthly level, so 124.62. So Euro yen still looks as though it's in trouble, without any shadow of a doubt there. Do the Euro pound. Euro pound spiked up to the monthly level at 91.01. It's come back down again. As said many times before that it can never hold a break. Yeah, it's just which makes sense with what's going on fundamentally, I suppose. So we're never really interested in breaks. It's gone back the other way. Pretty much news driven, so leave it alone. It's also worth looking at Swiss when we get times of trouble, as it were. So the dollar Swiss, pretty quiet, so telling us really that all of this is palpable nonsense, really, because there's nothing going into the Swiss. There is stuff going into the yen, but there's no liquidity till next week, and the Euro Swiss did pretty much nothing, so trapped. Dollar CAD, usual nonsense with the dollar CAD chart, and nothing's changed in the new year there. Talked about this area here, and we were potentially interested if we got anything negative. It never appeared. Here we had a timing signal come up to tell us that the trend had ended. Sharp reversal. Some of that's linked to crude. Obviously you get payroll reports out of Canada as well. We've closed back below that monthly level, so really got to watch crude pretty closely to see if you want to get involved in that. But takeaway really is it's Aussie and Kiwi and the Aussie-Kiwi cross that are by far the most interesting. I'm going to just finish off with some of the emerging markets. I'm going to do dollar real because we've got a coffee position, and the dollar's been weak against the real. This is the first sign of weakness that we've had in a while, and that is normally a positive for coffee, which I'll talk a bit about later. Had a negative signal, and so that one looks okay. Going to also do Turkey. The reason for doing Turkey is just to see whether there's any nonsense going on generally as the stress is appearing. Remember the wild move here, which got the European bond market massively bid, and it was all over nothing, so it's come all the way back and not a great deal going on there. Finally we'll look at the yuan, and the reason for that is slightly linked to gold. Consistently talked about this area here and how important it was for the price of gold in other updates. Had a major negative at the beginning of December. It's all pretty calm. If it takes out this level here at 68.31, then that would be a major plus for gold moving forward, because that's really what it's tracking. Okay, so that's it for FX. Let's move on to indexes.